Okay, welcome back. Sandeep J. Shah is now joining us on the show. He's Associate Director at Motilal Oswal Private Wealth Management. Sandeep, thanks very much. Great to have you with us here. Thank you for your time. You know, I just want to get a sense from what you feel the mood is with people who write big checks for stocks. I mean, the HNIs in that sense. Is the sentiment still very bullish, or people are now booking profits? I mean, as the markets have gone up very sharply recently.
You know, sometime in post-demonetization, I think there was a bit of a freeze as most large HNIs actually wanted to watch and see the effects play out on the economy. Incidentally, that was the time when actually at 8,000 when I had given a buy call to my clients saying that we should see a new high. And last week, as we hit a new high, I think that what I'm seeing is that though investors are a little concerned about valuations, given that partly because of demonetization and partly because the economic recovery has been more gradual, earnings recovery hasn't been very strong. So there is some incremental exposure which continues to happen actually because because of two things. One is that clearly we have seen that the effects of demonetization have been extremely limited, at least as far as the listed space is concerned. Because I think there could still be some effects of which could play out in the unorganized sector and the rural sector. But what impact that has on listed companies and profitabilities is another question. That's one. And secondly, I think the UP elections, the result has actually clearly given investors the confidence that given that this government is here to stay, they will continue to be on the reform track. They may continue to look after the poor, but it's not one in case of the other. It's not playing one against the other. It's actually both. To be on the reform agenda, to make India a better country to do business in, and also at the same point of time to look after the poor of this country. So given that both factors have worked out in favor of markets, I think clearly we're seeing that there is incremental exposure which is continuing to come to equities as a long-term asset class, and a lot of these investors do tend to look at the longer-term perspective, and from a long-term perspective the India story continues to shine very brightly.
Hi Sandeep, afternoon. So at 8,000 you give a buy call to your investor. So at 9,100, 9,200, what's the advice that you're giving? Book profits or buy some more?
Yeah, my view is that at least in the short term we should hit 94 to 9,600 broadly as a target. We are continuing to recommend to actually buy quality names. If 2015 and the early part of 2016 continued to be focused only on quality and growth companies or funds which invested in those, somewhere in the second half of 2016, I had given a call that we could start looking at about 20% exposure to quality cyclical names where the earnings growth was not clearly visible, but where there was hope of recovery, or there were some reasons to believe that growth would come back. And I've actually gone ahead and changed that 20% exposure to quality cyclicals to about 30% of client portfolios, whether it be directly through stocks or it could be through funds. So yes, continue to invest. Equities is really the only asset class which creates wealth. The only other way to create wealth is to actually build your own business. And besides that, all you can do is invest in somebody else's business. But given the risk profile of investors, they could look to either stagger their inflows at current levels or actually make lump sum exposures. But that's really a function of their own personal risk appetite as well. But stay focused on quality. Don't compromise on quality, because that's the only thing that ensures capital preservation. If you compromise on quality of business and quality of management, then you actually risk losing your capital as well.
Which I think one should absolutely in any circumstance avoid. Sandeep, I request you to stay with us on the line. We'll just take a very quick break and be right back with you.
Welcome back. We've been in conversation with Sandeep Shah of Motilal Oswal, who believes that the Nifty could move higher to levels of 9,400 to 9,600. Sandeep, just chatting about individual sectors, the PSU banks have underperformed the private peers in the last many years because they're saddled with the bad loan problem. Now we're increasingly hearing voices from the finance ministry, with the finance minister himself yesterday talking about a speedy resolution for the bad loan problem. Do you think that would make PSU banks an attractive option to buy at current levels, given their valuations are not as steep as the private banks?
Well, actually, to begin with, PSU banks actually bottomed out about a couple of quarters back. Incidentally, that was the time when there was actually a slowdown in the net addition to NPAs. NPAs kept rising, but at a slower pace. And since then, we've seen that some of the larger PSU banks especially have done very well. And some of them have even outperformed their private sector peers. Having said that, clearly valuations aren't as cheap as what they were 6 months back. And also, I do also want to watch out and see the lag effect of demonetization in terms of stress in the SME sector, MSME sector, as well as on the rural side. So I would actually watch this quarterly results very carefully for signs of that. But short of that, I think if the results were to suggest there isn't any incremental stress, there could be a few slippages here and there. There could be a few large accounts which could move into NPAs. But I think broadly, systemically, I think the worst is behind us. And I think that PSU banks will certainly, the larger quality, large PSU banks will certainly look attractive and be buying opportunities on all corrections. I'm not sure if I would stretch that argument to some of the smaller banks, because I don't think this is really the time for taking that kind of risk. But it's fair to presume that as the economy recovers, these PSU banks should continue to do well.
Right. So buy a bunch of them and sit tight, Sandeep?
Yeah, well, you could look at maybe just one or two of the largest PSU banks. I don't think I would extend my risk appetite to beyond that.
Thanks very much, Sandeep. It's great speaking with you. Appreciate you coming on board and hope to see you more often here on CNBC. Thanks indeed. All right, well, that's a wrap here on this edition of Trading Hour. The market's up about 30 odd points or so at 9,115. Halftime report will take all the action forward. Thanks for watching.